This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with their livestock roundup. And we're seeing livestock sector get a little bit of a bid today, which is nice to see considering we got some bad news overnight with more cases of the coronavirus, shocker, coming out of China. We think there's probably a lot more than are being reported still yet to come, but the market shrugging off that kind of outside market volatility. And we've also had cash soften up this week. We started about 120, worked our way down to 119 yesterday, and hearing reports of 118 in the north today. The kind of catalyst, I think, here is the fact that weights are coming off a little bit, and I think a lot of this is just technical reprieve from the recent sell-off that we've seen. We've managed to hold technical support in that April contract between 115.90 and about 116.60. This represents the gap from September 20th, as well as the key Fibonacci retracement. If we're able to get a strong close out above 119, potentially we go repair some of the damage that has been done and filled some of those gaps up there. But ultimately, we're looking to sell into these rallies and re-enter short positions with clients, not just on the speculative side, but also on the hedging side. Now, it is a holiday weekend. Coronavirus still a big concern, very fluid situation. So you might see a little bit of a risk off trade into the weekend. So tread lightly. You don't want to hold all that risk over a 3-day weekend where you don't know what the headlines are going to be. Now, moving over to the feeder cattle market, 136.90 for that March contract is the 50% retracement, or basically the meat in the middle of the range here from the contract lows to contract highs. If we're able to get out above here, potentially we go fill that gap from January 24th, comes in at 139.50. But as with the live cattle market, these are rallies that we're looking to step back in on the short side with clients from the hedging side and the speculative side. Bottom side of support, 133.65 to 134, breaking close there, below there, and look out, there's not a whole lot of support till 130 and below, potentially contract lows looking out over an extended period of time. Now, wrapping things up with the lean hog market, we saw April kind of trade a little bit lower, but managed to hold 63. 63 was a breakout point from February 6th. So previous resistance now going to be support. So long as we can defend that, I think we can start to consolidate and maybe work a little bit higher. And if we can get out above this week's highs, I think we can go back towards that 70 to 72 range, which I think will be probably fair value for the market. So again, headline risk going into the weekend. It's a volatile market as it is, so be sure to manage your risk appropriately here going into that holiday weekend. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.